Hello guys, today I want to talk about loans when it comes to life insurance policies. It is not a favorite subject because when you think about loans, what do you think about? Defaulting on the loans, you think about high interest rates, and you think about paying back those loans at times where you may not have the money. But with life insurance, it's a little different. As long as you have money paid into the policy, you have access to take out a loan as well as have access to your cash value. So what you have to think about or keep in mind with loans, because some people treat this as what I would say a forbidden fruit. Do not touch your policy loan because that will affect your policy. It will affect your policy, but like I said, there is a method to this, okay? So if you were to take out a loan, keep in mind, again, it's not like a regular loan. There's no credit check. And the death benefit that you choose for your life insurance policy stays in place, okay? It does not move. Now, what will change is if you take out that loan and you do not pay it back, they will take money out of the face amount that you choose, okay? Now, the death benefit, just keep in mind, that's a benefit that is paid out in case someone passes away, okay? So keep in mind that. So no credit check, death benefit stays in place. Now I will use myself as an example. And I'm referring to universal life insurance policies as well, okay? So with my universal life policy, I took out $500, okay? What is gonna happen is that amount will be taken out of my death benefit and I will have to catch my policy up as far as the cash value that I have available. So that's okay. Because with this policy, my goal with it is to continue to pay into it so I will always have access to cash value. As long as I'm paying my premiums into the policy, I want to have access to it whether I want to take out a policy loan or whether I want to take out cash value just to have, okay? So with just having cash available, not a loan, you just take the money out. Like I said before, especially with universal life insurance policies, you have to keep in mind that when you take that amount out, it will affect the death benefit and that death benefit will go down. But what you can do is continue to pay into the policy so you can catch that cash value up and it can accrue over the years. So the great thing that I like about it is that I know that I have access to that in case of emergency or when I want to take money out, but I'm also protecting my family if something happens to me. I still have that death benefit in place. So for instance, if I take out the cash value in the amount of $350, which I did because I wanted to use myself as an example, my death benefit went from $30,000 to $29,605. So still, if something happened to me, my family would still get $29,605. I am going to now, instead of paying $23 and some change, which I pay every month, and that equals about $297 a year, I'm going to pay almost double that because I want that cash value bucket. So the amount of premiums that you pay into the policy is going to go into this cash value bucket. I want that to continue to grow over the years. So there are some similarities when it comes to taking out a policy loan and cash value. You don't have to look at it as the forbidden fruit. You can have access to it as long as you know what you're paying into the policy and you pay back that policy loan. Now you may want to, you're probably asking about the interest rates. Okay, so I've seen interest rates on just regular loans, whether it's a student loan, personal loan, business loan, whatever it is, 14%. Some of you guys are probably paying 39%. I've seen it higher, okay? So you take out a loan, your interest rates are sky high, okay? Some people can't afford to pay back their student loan, so then, you default, okay? And then they come after you. They want their money. But that is totally different when it comes to life insurance. A policy loan right now, the loan that I took out is at 6%. So I have no problem paying that back. And even if I don't pay it back, take it out of the death benefit. Doesn't matter to me because I still have something in place for my family. I still have other multiple life insurance policies available as well. So just keep in mind that Policy loans, having access to cash value, totally different than taking out personal loans. And you do have that access, okay? And what I'm referring to, or these examples that I'm referring to, are for universal life insurance policies. So remember to start with life and value and end with power.